Welcome to Anafram Market Perspectives.
Friday market recap, tariff talk, data pulse, and our watch list. Welcome back. In 5 minutes, I will wrap the week using the S&P heat map, a concise tariff update, the key data that printed, a futures and commodities sweep, and a quick look at QQQ, plus our 2 stock ideas. Let's go. S&P 500 weekly recap, breadth stayed mixed, and leadership rotated again. Semiconductors cooled, with NVIDIA slightly lower and Broadcom down on the week, while advanced micro devices bounced but could not lift the whole group. Software was heavy as Microsoft and Oracle slipped. Communication services split with Google softer and Meta only a little better. Amazon eased inside consumer cyclicals, and Tesla fell more sharply. In financials, money center banks held up better than insurers. Healthcare was the bright spot with Eli Lilly. Strong defensive groups were choppy, and industrials traded two-way. Takeaway: leadership remained narrow and investors stayed selective rather than broad risk on Trump tariffs and policy. What moved the story headlines stayed busy, but the tone pointed to tactical easing in a few places. The President and Treasury Secretary Scott Bessent signaled that tariffs on coffee and bananas, items the United States does not grow at scale, could be reduced to help food prices. The Supreme Court continues to weigh the larger legality of the global tariff program, with questions from both conservative and liberal justices showing skepticism about using emergency powers for blanket duties. Markets are preparing for alternative tools if the court limits the current approach. Abroad, Brussels will present a plan to move the next phase of the United States and European Union deal forward. Switzerland is close to cutting its U.S. tariff rate from 39% to 15%, with final sign-off still pending. The one-year truce with China remains in place. Beijing is suspending added rare earth controls and ending probes into U.S. chip firms, while Washington is pausing parts of the reciprocal tariffs. At the same time, Reuters reported a soybean glut in China that could limit near-term U.S. farm sales despite the truce. The administration also said a trade deal with India is getting close. Mexico raised tariffs on non-agreement sugar to protect local producers. Net read, headline risk is still two-way, yet there are more signs of targeted relief even as the Supreme Court outcome remains the big wildcard rates and data. What actually printed United States? The 3-year auction tails slightly with a yield near 3.58%, and the 10-year auction cleared a little below, last month near 4.07%. API crude showed a build of about 1.3 million barrels, while EIA reported a larger 6.4 million build and a small draw at Cushing, United Kingdom. Labor data cooled with wage growth at 4.8% and the jobless rate at 5%. Third quarter GDP grew 0.1% and monthly GDP slipped in September. Industrial and manufacturing output fell on the month. Euro area ZEW sentiment improved to 25, and September industrial production rose 0.2% on the month Canada. Building permits surprised to the upside at plus 4.5%. China. New loans slowed sharply in October, while the late week slate brings fixed asset investment, industrial production, and unemployment. Takeaway: growth is resilient in North America, Europe is steady but soft in industry, and China credit creation remains cautious. Energy builds keep a lid on oil futures and commodities into the close. U.S. index futures leaned red with the S&P and NASDAQ softer, and the Russell underperforming. The Nikkei in Europe were also weak. WT. I sat near $59 and Brent near 63. Natural gas firmed around 4.6. Gold hovered near 4,100 an ounce, and silver near 52 long bonds were steady, and the dollar index was firm. Bitcoin traded near 98,000 to 100,000 after a choppy week bonus section. 1 ETF and 2 stocks, QQQ. The 5-day view shows a late-week attempt to stabilize after a stair-step lower. We will keep it simple. Strength back above the 20-period band on your intraday chart improves the tone. Failure there argues for patience. Alibaba. Post-earnings chop continued around 160, We are watching for a firm close back above the mid-band as a sign that buyers are willing to defend into the China platform prints next week, Tencent. After a sharp midweek drop, the stock started to recover into the close. A hold above the short-term band keeps the rebound case alive into results. Game plan: stay balanced while tariff headlines and the court discussion evolve. For traders, keep risk tight and respect intraday levels on QQQ. For investors, scale into quality names only after clean confirmations and guidance that supports multi-quarter artificial intelligence demand. I will see you Monday for the pre-market setup and fresh levels.
Thanks for watching. If you found this valuable, hit subscribe and share this with others. See you next time on Anafram Market Perspectives.